Welcome, my name is Vicenteluz with Forex Trading Institute. Please take a couple minutes to go over the following risk disclosure. Lesson 3, Support and Resistance. Trading is nothing more than a financial game between the bulls and the bears, who both have clear objectives. In order to find support and resistance, we first are going to learn how to find highs and lows. Highs are candlestick formations where there are two candles to the left and two candles to the right that are lower than the center wick high. And a resistance is a high that is lower than the previous high. Okay, and we're going to see here, for example, here's a point of resistance, and we got two candles to the left, and we got two candles to the right which are lower than the center high. So there has to be a minimum of two candles to the left, two candles to the right, which are lower than the high. And there could be obviously a lot more than two candles to the left and two candles to the right. Just a minimum of two has to be in order to be considered a high. A low, there has to be two candles the same. And lows are candlestick formations where there are two candles to the left and two candles to the right that are higher than the center wick low. And a support is a low that is higher than the previous low. And we're going to see here, for example, we have two candles to the left, two candles to the right, which are higher than this center wick, which is the lowest point. And these two candles are higher than that lower point. These two candles are higher than this lower point. Now, when we find support and resistance, when we open up a chart, minimum, we have to go and find 4 levels of support and 4 levels of resistance before we put on a trade. And we currently start at the market price, and when we're finding resistance, we find a high that's higher than the market price. Okay, and then once we find that high, we have to find it's like going upstairs, we find a higher high than that, and then we find a higher high than that, and then we find another higher high. There has to be 4 levels. In this presentation, you're only seeing 3 because it wouldn't fit on the 4th, but there has to be 4 levels of resistance. And then we start up with the current price, and we start doing the same thing, finding the first low, okay, which is lower than the current market price. And then we go to the following low, and then we go to the following low. And these are support, and these would be resistance. These are here points where the market might bounce and then go down, and they stay between these points. There's a lot of pressure here, and these are points where you want to see the market can break these points. Now let's look at this in a chart. Okay, we're seeing the US dollar and US Canadian dollar, and we currently start at the market price here. For example, here's the market price. It's always the last candle all the way to the right, and we start going up. For example, here we start going up, and here, okay, would be the first high. You see how we start from this price, we start going up, and this is the first high. And how do I know it's a high? We got 2 candles. In the example, we have 3, 4 candles, which are lower, but their minimum has to count. I always count. There's 1, 2 candles, and then there's 1 and 2 candles to the right. This would be the first level of resistance, and I usually like getting this tool right here. And putting a line on top in order to know that that's a resistance point. Now, then I start from this point and I start finding, okay, where is it another high? Here's another high. Now we got 2 candles which are lower to the left and 2 candles which are lower to the right. And then we start from this point and we keep on going up. And there's 1, 2 candles to the left and 1, 2 candles to the right. That would be resistance 3. In order to continue to find more resistance points, we would have to either compress our charts with this tool right here. We compress our charts, or we would have to go to a bigger time frame. Okay, so this is a 60-minute chart. We might want to go to a 4-hour chart and a daily chart. Okay, now we do the same thing. We start off those are resistance. These are roofs in the market, and these are floors in the market. And we start at the current price, and then we start going down, and we find here is a level of support. We got 2 candles to the left, and we got 2 candles to the right. Now we start from this point and we continue going further. Now this wouldn't be support 2 because it's higher than this support. You see how the market price we have to start from this point and find a lower low. It's like going downstairs, and then we would find it right here. We got 2 candles to the left and we got 2 candles to the right. Now placing stop orders. We never trade without a protective stop loss. If you're buying or you're a bull, your protective stop loss must be at the last low. And you're going to see that's why we use support and resistance in order to help us put stop losses, just like they also help us determine our limit points. If you're a selling or a bear, your protective stop loss must be at least at the last high. And if the stop loss is too far away from the entry point and does not meet your equity management, we pass on the trade. And here's where you have to have the discipline and say, I'm going to pass on the trade if there's too much risk. For example, there's a big distance to the next high and you got to take 400 or 500 pip risk, it's not worth it. We pass on the trade. This market gives us plenty of opportunities. Now, all markets move up, down, and sideways, and we have to determine what the market is doing, especially when the market's going sideways. Support and resistance are going to help us sell at resistance, buy at support, and obviously when it's going up and down, the support and resistance levels are going to help us determine limits and stops. For example, here, look at the game between the bulls and the bears. Like we said, the market went up, scored a point, pulled back to the support. Look where it was at the support. Okay, when it gets to support, buying pressure starts going, and a lot of operators here a lot of traders start buying, and they bring it back up, and they try to go to and make it to another high here, and they made another higher high. That's their point. The bulls scored a point, they made a higher high, and then they pulled back, they made a lower low. And you can see this is a game between the bulls and the bears. And obviously knowing where all these orders, here's where the selling pressure comes in at resistance, and here's where the buying pressure comes in at support. Okay, now let's go to the live market for a trading exercise. We're going to learn how to put supports and resistance in the live market. So I'm going to switch the screen and keep on recording here. And we're going to go to our charts. Okay, and when we go to our charts, okay, and we enter here, we could see, okay, and we open up a chart, okay, and how to open up a chart? We go chart, here we go chart, we go new chart, and for example, let's say we want, and let's do the dollar and guess the Japanese yen, and let's open up a daily chart, and very important, daily supports and resistance. Okay, let me go back to the screen here, the charts. Daily support and resistance are very important. They're very important elements because they're the strongest supports and resistance. A lot of bank traders trade off daily charts, so you always want to look at them at least and make a note of the daily support and resistance. So here's the current market price right now. We're seeing the dollar against the yen. Now we start from this price and we get a little line, and we're going to start and find a lower low. So we had to go here and we find a low that's lower. And we know this is a low because we got 2 candles to the left, 2 candles to the right. Now we have to compress our charts and see if we could find a lower low. For example, in this case, we can't find a lower low because this is one of the lowest points that the dollar has been against the yen. Here I'm going to show you where we would go to a bigger time frame and try to find a lower low. So this is support, and you could right click on this and change the color if you want, and for example we could put it red just to know that it's a support, and you can put it any color you want. Now here we start to find resistance, and here we start the current market price and we go up, 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 and here we find that this is the first resistance point. So we put a line above here, and we know this is a resistance because we got 1, 2 candles to the left, 1, 2 candles to the right. Now we start from this point and we continue going up, and we have to start from this point and find another high that's higher. For example, this high, we got one, but we don't have the second candle because this is about almost the same level to the left. So we continue to finding. Okay, we find a high, and we got 1, 2 candles to the left, 1, 2 candles to the right. So we would put this as a resistance point, and this is at, see how it tells us the price, it's at 99.52, the resistance number 2. Now we continue going up, 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 and we find here another resistance, 1, 2 candles to the left, 1, 2 candles to the right, and let's see at what price it is. It's at 154. Now, if this would have been within 10 pips of this one, we would just determine this to be and choose the higher one. But in this case, we had a good space between the candles. So we have here resistance 1, resistance 2, resistance 3. And now we go from this point and try to find another high. And here we have another high. And we got 1, 2 candles to the left, 1, 2 candles to the right. Okay. Now, this is important, obviously, because we're finding points of resistance and points of support. And the more times that it touches this level, the stronger the support or stronger the resistance becomes. Now, these points are important, and they're very important as long, and also the prior. For example, we're at the at this price now, and we throw this back. For example, in at one point, this used to be a support because we had 2 candles to the left, 2 candles to the right. So I'm going to draw here, and I'm going to put, for example, I'm going to put it in, let's put it purple. Okay, and these are important points. Why? Because this was support, and look what the market did. It started running, and it broke the support. Okay, now when it breaks support, if this market tries to rally back, it now becomes resistance. It's like if I break through a floor and I start going back, that floor that used to be my floor now would be my roof. Same thing happens in the market. So you always want to go back and find prior levels and just put them a different color so you know that they're not present. There were past supports that are now becoming resistance. For example, in this case, and we put another point right there. And we would know these are key points that we might want to look for confirmation. For example, now look at this thing. If this market starts going back, look how it broke through, try to go back, but now it's receiving resistance in this level. So this market might be going to look for this level. Now here we only have one support. Here we might want to go up and open a bigger time frame. For example, we could go to the dollar yen, the same currency pair, and go to a weekly time frame. You always want to put it weekly and then just go across here to monthly and quarterly. Okay, and I open up this chart. Let me just close it out. Okay, let me go back to our charting package. Okay, and I want to show you here a weekly time frame. Now here I might be able to find a lower point. And look, here I would have to go way back here to 1994 to find a low. For example, here's a key support area, okay, which is all the way to 79.67, and our current market price. Remember, it has to be below our current market price. And here's where we're seeing this is the last support it has, and look how there's a big gap. Okay, if this market breaks the support, it has a lot of room to run, and it might the bears might want to make a point and try to score a point at this level. Okay, so that's a way that you could get around here and just navigate around the different time frames. Okay, and here we see the daily, and you see how in the daily each candle is a day, and the weekly each candle would be a week. So always put your 4 levels of resistance, 4 levels of support, and find past levels of support that are now resistance, just like past levels of resistance, which now would be support. If it was a rising market, okay, this would be the opposite. Right, for example, let's look at the dollar, I guess the Swiss franc. Okay, I guess the Swissy. Okay. We open up a time frame. Okay, let's go back to our charting package. Continue recording here. Okay, and you see how we have, if I throw this back, okay, this was at one point, okay, resistance. So I would put here resistance, and now when it breaks, this is now going to become a support. Right? So you always want to leave these past levels because the market starts rallying back. Look how it rallied back, and we also had another. This was at one point also a resistance. I could probably put this and raise this here too. Huh? And look how the market rallied up, and when it came down, look where it bounced. It bounced. This past resistance became support, and this is a good level to look at buy opportunities because this was resistance. Now it's becoming support. So it's important to find resistance levels, support levels, and past resistance will become support, just like past supports become resistance. Okay. So this is very important, obviously, support and resistance, and obviously this is one of the first steps you do when you open up a chart. My name is Vincent Luz with Forex Trading Institute, and I'll see you in the next lesson.